We have the bulls, obviously the most bullish. And I just want to talk about this quickly. The bull trade's most bullish early on entry, but becomes more neutral with up moves late in the trade. By more neutral, I'm talking about more neutral than a V32, more neutral than an M3.4U, sometimes more neutral than an M3 Classic, sometimes even more neutral than a bearish butterfly. How can you say that? I can say that because the market, if I'm in a bull trade, the Russell can literally go up 200 points and then come down 200 points in a period of 3 days, and you're still up money, or a period of a week or 2 weeks or whatever. V32, it starts out less bullish than a bull trade, and it's going to withstand a larger move down initially, but as soon as we start getting up moves, we have to adjust out of our risk to the upside. And when we adjust out of our risk to the upside, we're taking on more downside risk to the point where we are going to be more vulnerable to a down move than we would be if we were just in a bullish vertical, right? So everybody see how I'm getting you to think of these trades dynamically, not statically, right? There's one way to look at them as the way they're entered. It's another way to look at them as the way they're going to progress out during the trade.